Crude oil markets have been shifting for most of today, with prices around $93 per barrel for the Brent standard, only slightly behind 7-year highs as the market mood for the most part remains bullish. Arise business analyst Bode Ososami joins us now on the latest on energy matters. Glad to have you join us, Bode, quite a time. First, let's look at oil prices. We're only a few days short of seeing $100 Brent.
Well, thanks for having me on the show. Although we are seeing a very unusual upward momentum, Brent up from $80 to $94 in barely 5 weeks. But what matters, like I always say, is the demand-supply dynamics, not the steepness of your price curve. Latest forecast for world oil demand growth has not yet changed for 2022 at 4.2 million barrels per day. And we still expect a crude surplus in 2022 reaching 1.3 million barrels per day, slightly less than the previous forecast of 1.4 million barrels per day. We have a cold winter, gas shortages leading to more demand for crude, but there are other issues. The main one, of course, is the geopolitics, the Russia-Ukraine standoff, at least $5 to $7 geopolitical risk premium, what they also call fear factor. That could fade or worsen. And then the potential impact of the coronavirus variant. Analysts have not ruled out resurgence completely. There are still ongoing supply chain bottlenecks and actions of central banks that could still constitute potential headwinds to the economic recovery. And the US and China also plan to reopen strategic reserves, some already opening, even as we speak, shale producers coming back as quickly as you can. Although we know that OPEC Plus members, some have capacity issues that they are trying to address. The most recent issue with oil prices are the positive signs on the US-Iran nuclear negotiations front. Which may have encouraged some profit taking earlier in the day. The US restored sanction waivers to Iran that will allow international nuclear cooperation projects. So I would say that if crude goes over $100, when you consider all these factors, which is what you really need to consider, if it goes over $100, I think it will be for a very short time. Many believe it will still come under $80 by the middle of the year, especially as the geopolitical risk fades, the supply capacity expands. But there's still a lot of uncertainty, and volatility will remain high.
You'll have something to say about the reappearing fuel queues in Nigeria, especially Lagos, Abuja, and Port Harcourt. But let's talk about safety, and the environment. They're very, very critical to the oil industry. What are the issues against the backdrop of the recent explosion?
Well, we await the findings of the comprehensive independent investigation of the incident, and our thoughts are with grieving families. My understanding is that we've had more than a few incidents like this in the past. The main issue is the importance of having a safety management culture in the oil sector, and this takes time to build. There are no shortcuts. We are talking about human lives and devastation to ecology and livelihoods of entire communities. So to get that culture of excellence, especially in the safety management space, it requires integration of talent, scale, professionalism, technology, and adequate investment. All this backed by rigorous and independent, no-nonsense regulation that understands that heavy consequences must follow any transgressions enough to deter others, and that will lead to a very high duty of care. I'm aware that the Nigerian Society of Chemical Engineers is currently pushing a process safety management initiative for the oil and gas process industries in Nigeria to raise the standards. They're doing this in collaboration with the Chemical Center for Process Safety in the US. And initiatives like that should be encouraged. I like indigenous players. We must have them. But local content must never mean compromise to safety and standards in the industry, despite the learning curve. And regulators must be watchful to ensure that local content doesn't mean complete destruction of capacity and competence, which is what you get in the absence of strong regulations. If you have an environment where you don't have the talent or you don't have the technology or the investment, what you have is not an industry, but a recipe for self-destruction. There are no easy fixes, no easy answers. We just have to do the right thing.
You couldn't have said it better. Local content does not mean lowering your standards. Well, many still say until we get full deregulation of the downstream, gains from high oil prices will remain capped. Your thoughts, Bode?
Well, when you have only one importer, look at those skills, for example, NMPC, there's no competition, consumers and players are held to ransom, sometimes resulting in unnecessary scarcity and quality issues due to lack of the normal alternative options that you normally see in competitive markets. And of course, you get weak quality assurance. Also, if there's no competition, and then the hoarding and the confusion, these are just symptoms of the overregulated environment, which I believe should be regulated as quickly as possible. The other thing, of course, is that high crude oil prices, that should be a positive windfall in inefficient environments, only fuels fiscal wastage one way or the other. So we must have a clear, accelerated trajectory to complete the regulation as quickly as possible. The Dangote refinery will go very far when fully operational to alleviate the issues, because when we refine our oil, our import bill is drastically reduced, jobs are created. And let me close by just saying all the studies I've encountered show that without the regulation of fuel prices, we just can't maximize our downstream sector, which we're just going around in circles. So we must have a clear goal, even if we can't do it in one swoop, to progressively deregulate and move to a more efficient environment in the downstream.
But last one in 30 seconds, if you can. The reappearance of fuel queues in parts of the country, Lagos, Port Harcourt, Abuja.
The only short I can say there is it's inevitable. It's just a symptom of a recurring situation. We've been talking about fuel queues the last 10 years, even longer than 10 years. Have you ever wondered why they never disappear? I can tell you why. Regulation. And if you regulate, let people bring in fuel as they can. Of course, over time, it will be managed. There are issues that you have to deal with, but an environment where you have free flow of inputs and consumers can buy at the right price, you will not see these queues, and hoarding will disappear.
All right, we'll leave it there. Bode Ososami there, business analyst.